Welcome back everyone to the CFO Swinger Watch newsletter's technical analysis video for the week of June 3rd through 7th. With that, let's start off with the markets. So what we have here is our typical S&P 500 or ticker symbol SPY. And we have to talk about last week, but last Friday's price action only. We can completely forget about and ignore Tuesday, Wednesday, and Thursday because it is useless. Now, last Friday left quite a mark on the daily time frame. Why? Well, what we have here and what you guys are seeing here is a very bullish reversal candlestick, and that is the hammer candlestick. And this hammer candlestick clearly indicates that there's a large turnaround from the lows, which explains this very long bottom wick. And we ended up with a very nice bullish close as well, which is explained by this nice body and close near the high of the day. And you guys can go right back to the private CFO Discord last Friday and see how I was able to know where the exact bottom was for last Friday. Alright, so make sure you guys go back to the messages that I sent out during market open and kind of read as to how I was able to figure out where the bottom was for last Friday. Now, this reversal candlestick, this hammer candlestick, was also accompanied by a very large buying volume bar as seen right here. And what's particularly interesting about this volume bar is that this is our biggest amount of volume that we've seen since we bottomed out in April 19th after we saw that nice 5% pullback from the then all-time high level of 524. And so to me, this does not seem like a coincidence that we would see a large amount of buying coming in right when we are able to break over that previous all-time high level of 524 and close over this level. And so to me, this kind of signals that we might have seen the lows for the short to mid term. That's right. Last Friday's lows might just have been the intermittent short to mid term low for the next couple of weeks and maybe even the next couple of months. All right, so it's something to keep in mind based on how the price has reacted last Friday, and on top of that, this huge increase in volume. Now, obviously, last Friday's volume will also increase the average daily volume as well, which it already has based on this nice small uptick in this average volume line, this orange line, and I would expect it to continue to curl up higher in this week alone. So based on last Friday's price action, what I'm going to be expecting is a simple continuation of this nice reversal to the upside. However, it's not going to be that easy because tomorrow, depending on how the current overnight futures is moving throughout the entirety of tonight, we might see a small gap down first. Okay, and if we do see a small gap down first, we might see a nice red to green move back to the upside where the price drives up higher at market open, and we can see a retest of this resistance level at 528.30ish. And this level is also coinciding with our daily 10 SMA. And remember, we are currently stuck in between my momentum short-term SMAs, my 10, okay, this red line here, and my daily 21 SMA, my light blue line here. And usually when we are stuck in between these two SMAs, we tend to consolidate. I've repeated this many times in the past, so hopefully you guys remember that. And if we do see some early consolidation for maybe tomorrow and maybe even Tuesday, it would be pretty nice to tighten up right underneath the daily 10 SMA and use it as an SMA resistance until we're able to break over the daily 10 SMA and break over this 528.30-ish resistance level and eventually reach the upper range of this entire all-time high range that I specified 2 weeks ago at 532. And so ultimately, based on how we had a huge reversal last Friday, and if I am correct that this might be our intermittent bottom for the next couple of weeks or even months, we should be seeing a retest of the current all-time high number of $533.07 and possibly even continue to melt up higher and possibly even on low volume into new all-time high levels. Okay, and this can be sustained until the end of quarter 2 and into early quarter 3. All right, so for this week, I might be expecting a little bit of a continuation run, but at the same time, we're going to need to see some consolidation first. Obviously, because of the fact that we've had such a large range last Friday, and that's the reason why I want to see some early consolidation early into this new trading week, and then a continuation to the upside later on into the week. All right. Now, the next index that I want to see is IWM. So if you guys remember from last Wednesday's Hump Day Market Recap video, I first mentioned IWM and the reasons why we want to be looking at this name right now, and we want to be long this market cap very, very soon. So IWM on the daily time frame is currently making a very odd looking cup and handle, okay, or another odd looking inverted head and shoulders. So currently we are underway to forming and completing the right inverted shoulder with the overall inverted head and shoulders chart pattern having a neckline, okay, neckline resistance of 210. Remember, I gave you guys all of these upside targets and upside, or specific resistance levels to the upside months ago. So make sure you guys watch my previous videos as well to understand why I am looking at these specific levels to the upside, which I will show you guys shortly. So IWM here has been making a pretty bullish chart pattern on the daily time frame. However, on the weekly time frame, on the higher time frames, it's a bit messy, right? I mean, this is a bit messy here, right? We've been moving up and down, and now it seems like the price is kind of indecisive. It does not know where to go, but we can at least observe that the price is still consolidating the huge move from lows that we saw back in late October all the way up into early this year. And so this entire month's worth of consolidation will eventually have to lead into a huge breakout that small caps and mid caps have been waiting for. So the overall lagging market caps, right? And again, I've mentioned this plenty of times in the past few months and even last year as well. So make sure you guys try to remember by looking at my previous videos from earlier this year or maybe even last year as well. So IWM on the weekly time frame, very messy, just simple consolidation, sideways price action between lower ranges of 189.50, 192.50, and ultimately that midpoint range of that psychological whole number level of 200, and the upper ranges of 204.80, or if you guys want to round up, 205 and 210. But ultimately, what I want to see is a breakout over 210, and I want to be in, and we need to be in before this breakout over 210 so that we're able to profit off of a potential lasting move into the end of this fiscal year and into early quarter 1 of next year. That's right, I am currently planning out a potential long-term position for IWM for small caps when the opportunity arises. So make sure you guys are also hawking this specific market cap or the small caps. All right, so if we're able to break over 210, then my next profit target for our long position will be 216.20, and then ultimately I would really like to see, before the year is over, a retest of 226.50. Now these are all levels that you guys can clearly see on the weekly and even on the monthly time frame. Right now, if we are lucky, we might be able to see a retest of the previous all-time high level or area starting at 233 before the year is over. But I'm not going to be too optimistic. I'm not going to be predicting all day out there. But I will be as optimistic as possible, where we can see a possible retest of at least 226.50. Okay, so make sure you guys are alert and literally have alerts on for IWM, and I will alert this potential long-term position for small caps. And with that, let's segue into the 3 swing trade ideas that we have for this week. And the first one is PZZA, or pizza, or Papa John's International Incorporated. So I have already given you guys a brief summary as to the reason why I want to be looking at this name for a potential mean reversion trade last Friday in the private Discord. But I want to kind of do a more deep dive this week and make it our first priority swing trade idea, because it looks way too good to just not put it in this week's report. So let's get into it. So on the daily time frame, this one has been moving down, and let's count down together, ever since it broke below the daily 10 SMA after a brief oversold bounce for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, and 18 straight red consecutive days when it broke below this daily 10 SMA, and obviously the daily 21 SMA as well on the short-term perspective. And that is quite the record here for this specific ticker, as we've gone down 8 consecutive days, and it was red for 18 consecutive red days. Now, ultimately, this has led into the daily time frame having a relative strength index value of 15.74. That's right. We are very, very oversold on the RSI indicator. And we have been very oversold once we got this very nasty earnings reaction to the downside, because the company is currently facing a lot of competition from other leading pizza companies, like, for example, DPZ or Domino's, wink wink, and a lot of macro issues as well that they're not able to currently just really weather out the storm, the macro storm that they're currently facing. So the market makers have reacted to this specific stock, and it has been moving straight down. So what is the opportunity here? Well, first of all, before we talk about that, there is still very significant risk of this stock continuously moving to the downside, even if the RSI is literally at dismal values of very, very oversold conditions. Because again, the oversold value, the official oversold value of the RSI is 30, and we are way below 30, and we're not even close to being in the value of 20. And mind you, we are on the daily time frame, one of the higher time frames. And so to kind of really just push the point home here to you guys, the weekly RSI is also sitting at a value of 20.79 based on last Friday's close. So all the higher time frames, the weekly and the daily, are very, very oversold. So there is still a lot of risk in the fact that we can still continue, believe it or not, continue to move to the downside as sellers are not willing to capitulate or at least take profits. So that is a downside risk that we need to be considering. Now on the other side, okay, this is where we want to be coming in by being a bit more optimistic. We do know that PZZA is overdue for a oversold bounce. And so if you go on the 2-hour time frame, and this is where we will be basing our swing trade or mean reversion trade on, okay, we are currently looking at a very nice falling wedge that seems to be nearly completed because the price is getting very close to the point where these two trend lines will eventually converge, right? And again, there's still that slight possibility that we can see a break of this falling wedge as we move lower. So make sure you guys remember that, and make sure you guys have your stop losses set. So make sure you guys read the newsletter first. Now, on top of this very inherently bullish falling wedge chart pattern, we also are backed up by a hidden bullish RSI divergence. So what we have here, let me mark this as well, is an RSI on the 2-hour time frame making higher highs and higher lows. But as this is happening, the price continues to make lower highs and lower lows as it continues to consolidate and form this falling wedge. So this hidden bullish RSI divergence is giving us another confirmation signal and a complementing signal on top of the very bullish falling wedge chart pattern that the price might just be ready to break to the upside and have a nice reversal move to the upside. And that is why we need to be in this name and involved in this name when this occurs. And so for this specific name, we want to be looking at an entry point over $47 or at 47.10. And that is literally where we need to be breaking out from this falling wedge at $47. Okay, and 47.10 will just give us that confirmation that the price will be moving over this 2-hour 10 and 21 SMA and over this falling wedge. Now, obviously, if you guys want a little bit more confirmation, this 48 daily resistance level can also be a confirmed entry point for a long position to the upside. Now, if you guys want to have an early entry point at 47, you guys can actually add onto that same position once the price decides to break over 48 to gain a larger position if the overall position is working in our favor, of course. All right. And so my ultimate personal profit target that I want to see is 52, which is the next major level of daily resistance. Now, mind you guys, on the monthly time frame, okay, this $52 level is also and has been a previous level of resistance and support back in 2019, 2018, and even in 2020. And so this will be a pretty important level at 52. Now, what's also interesting on the monthly time frame is that the monthly 200 SMA, okay, is still rising. And so if the price decides to go all the way up to 52, then I would expect the monthly 200 SMA to have caught up to the price by then and should be coinciding with this very significant 52 resistance level, right? And at that point, I would personally be taking profits, but there is still a chance for this one to continue higher. So 52 might just be a great checkpoint to take half off and leave the other half to ride to the upside. Now, this is a bit too optimistic, but if we do break over 52 and continue to move to the upside, there's still a possibility of us hitting the next major level of resistance at 60.20. Or if you guys want to keep it simple, the whole number level of $60. Alright, so this one is obviously very, very high risk, but it is a risk that we can choose to take simply because of the fact that all the probabilities are pointing towards a bounce, right? A very, very oversold bounce. And that is exactly what we need to be taking advantage of if we do see that oversold bounce, which can lead into an overall reversal or a mean reversion back towards major resistance levels on the daily, weekly, and monthly timeframes. All right. Okay, so the second swing trade idea for this week is TSLA or Tesla. So Tesla was a previous swing trade idea from 2 weeks ago, and this one has finally given us a reason to be really excited and really bullish on this stock this week, because the right shoulder of this inverted head and shoulders is finally finished, right? It's finally completed, and the price has gotten very, very tight underneath that neckline resistance of the inverted head and shoulders chart pattern at 180. In fact, the past 5 to 6 trading days, we've been using this 180 whole number resistance level as a major level of resistance. And that is why we still need to have an entry point over 180.10. And once that occurs, I need to see some very good buying volume to come in, just like what we saw 2 weeks ago on this specific candlestick, accompanied by very large buying volume as well. So nothing has changed too much for this specific swing trade idea. All we need to see is Tesla breaking over 180 and holding 180 as a new level of support, because last time it failed. And why did it fail? Again, let's keep it simple. The price was just continuously consolidating to complete this right inverted shoulder. So as long as we're able to stay over my major SMAs like my 10, my 21, and also my daily 50, this dark blue line, we should be ready to blast off to the upside and eventually hit all the profit targets that I have also mentioned 2 weeks back. Now, I give you guys another layer of confirmation and a reason why, or an indication why we should be looking at Tesla for the next couple of weeks, including this week, in the report itself. So make sure you guys read the newsletter first. Right, and last but not least, we have HPE. Now, this one is a little bit of an honorary mention for this week's report, because this will be more of a watching name. Like we really wouldn't want to be playing this one because, well, this stock has earnings on Tuesday. However, before I dive deeper into the reason why this is most likely just a watch list name, let's go over the technicals. So HPE has been making a multi-year base since 2018. I mean, this is a huge base. And in fact, if I go out to the monthly time frame, you can still very much clearly see this large base. And this base is forming, and you guys might be seeing a consistent theme here for this week's ideas, a large macro inverted head and shoulders chart pattern. Now, obviously the right shoulder is a bit extended, so you might be just saying, hey Andrew, I mean, at this point I don't think this is a inverted head and shoulders chart pattern anymore. Rather, it is a nice flat base, right? And that's completely fine too, as long as you guys are seeing what we are seeing. This is clearly a very large macro bullish chart pattern, and it looks ready to have a nice blast off into new all-time highs. And again, this is a recent IPO back in 2015, and ever since then, all it has been doing is moving sideways, right? So this stock has been moving sideways from 13.50 all the way up into 19. And if you did not have that black swan event in 2020 from COVID, this thing would pretty much been stuck in between 13.50 from the lower range and to 19 as the upper range. So now that we are currently still in between these two levels, okay, it seems like this is ready to break to the upside over 19 and have a nice new all-time high print. Now, the reason why this is going to be a simple watch list name for this week is that we have earnings. I do not know whether or not this specific company will have great earnings and have a great earnings reaction. It can be the complete opposite, or it can just be a complete mix, a complete a screwing around of the price where we see great earnings results, but we see a negative earnings reaction, or we see really bad earnings report and numbers that come out on Tuesday, and then a complete positive reaction to those ugly numbers. Okay, so we don't know what will happen, which is the reason why we need to be looking at this one as a watch list name only. And that's another reason why I'm not going to stress the importance of the actual entry point for HPE, because the earnings report can completely screw up our entry point over 18.10 and possibly maybe even drop the stock way back down to 13.50, right? Who knows? So again, from a technical standpoint, this is absolutely extraordinary. I mean, this is literally A+ on the daily, weekly, and monthly, the complete trifecta of the higher time frames. And so if we're able to break over $18 and continue to move to the upside and hopefully see the earnings reaction as a very positive reaction, maybe, just maybe, we could possibly be into earnings and see a move all the way up into new all-time highs. So there's still that possibility as well, where we can see the earnings reaction lead into a new all-time high level. All right. So HPE has initially caused some stirring this entire week, or last week, excuse me, based on this very volatile price action. But its peers like HPQ, right, and DELL have just been on wild rides, right? And so if they're able to move to the upside thanks to earnings reaction like DELL and HPQ, then there's a chance that this specific name in a similar group can also break to the upside like those two other tickers did, right? So again, this is a simple watch list name. Do not try to trade this one before earnings on Tuesday. All right, so that is it for this video. If you thought this technical analysis video was insightful, make sure you guys leave a like down below. And if you aren't subscribed yet, I don't know why you guys wouldn't be, make sure you guys hit that subscribe button as well. All right, good luck, and I'll see you all tomorrow morning.